Hi traders, welcome to my Forex video tutorial. In this tutorial today, I shall be sharing with you the best Forex strategy that I'm using. And in fact, every time I use this strategy, it gives me a very decent profits. Okay, but first of all, before I go through with you the strategy, I shall talk about what makes a good trading strategy. Okay, so a good strategy, to me, is one that have a decent winning percentage. Okay, when I talk about decent percentage, it's not what most people think about. Because most new trader thinks that a decent strategy should have 100% winning trades. Okay, this is the kind of I usually receive email from traders telling me that they jump from one strategy to another because this strategy make 2 losses. Okay, therefore you have to be realistic. Even the best trader on earth does not win 100% of the time. There is in fact no strategy that wins 100% of the time. Okay, a decent winning percentage will be around 70%. Okay, as long as you have 10 trades and you manage to win 7 of it, this is considered a very, very good strategy. You will never find a strategy, that wins 100% of the time. If you ever heard someone telling you that they have a strategy that wins 100% of the time, and they want to teach you, and you are going to enroll in the course, I must tell you to stay away from these people because they are scammers. Okay? They do not know what they're talking about. There's no strategy that wins 100% of the time, and therefore this is one thing you have to accept as a trader. Okay? Okay, some of you may think that if you win 7 trades out of 10, how much money can you make? And therefore, the second factor to a good strategy is good risk-reward ratio. With a combination of a decent winning percentage of 70% plus a good risk-reward ratio, which I will talk more about this risk-reward ratio later on, in case some of you do not know what is it, okay, you will make a lot of profits every month. Okay, I'll talk more about this later on. And the third factor, that makes a good strategy is easy to execute. Okay, there's no point, learning a strategy that has so many factors to consider and make it very hard for you to enter a trade. Okay, a good strategy is one that's very simple. Okay, and again, this is the main problem. Most new traders think that a good strategy is one that has a lot of indicators, a lot of factors to consider. But in fact, if you take a look at those professional traders, the strategy that they are using are mainly those very simple strategies. And most importantly, it makes money. Okay, and today I'm going to share with you how you use this strategy to make money. Okay? And this strategy, it actually consists of these 3 factors, and therefore is to me the best strategy to use. Okay, so the importance of risk-reward ratio, some of you may not know exactly what is risk-reward ratio. Okay, a risk-reward ratio basically refers to your risk versus your profits. That means how much you are going to risk every trade and how much you are going to take as a profit in every trade. And to me, the minimum risk-reward ratio is 1:2. That means, let's say for example, every trade you enter, you place a stop loss of 20 pips. You must make sure you take a 40 pips profit every trade. Okay, if your stop loss is always set at 30 pips, you must make sure that your take profit must be 60 pips, double of what you lost. In other words, with one winning trade, you can lose 2 trades and you're still in break-even state. Okay, if you have a strategy that have more than 1:2, is even better. Okay, but the minimum is 1:2. So let me tell you exactly how powerful, is the risk-reward ratio. Now we have an example here. Let's say, okay, let's say you have a strategy that wins 50% of time. Just like I said the good strategy is about 70%, Let's say we have a strategy that is not so good. Maybe it wins 50% of time, and you actually enter 10 trades every month. Okay, and the risk-reward ratio is 1:2. Your stop loss every trade is 30 pips, and your target profit is 60 pips. So some of you may be thinking, am I still winning money? Okay, because out of 10 trades, I only win 5. In other words, I lose 5. You are still making money even with your 50% winning percentage due to this risk-reward ratio. Okay, so you see, the total profits that you make at the end of the month is 60 pips, because you see, every trade you are going to put a target profit 60 pips, and you manage to win 5 of it, you actually win 300 pips. Okay, the losses that you make is actually 30 pips, which is a stop loss times 5, you lose 150 pips. Overall, you're still making 150 pips. Okay, if you're trading a standard lot, whereby 1 pip equals to $10 US dollar, you're actually making 1,500 US dollar, okay, from a strategy that only wins 50% of time. Okay, can you understand the power of this risk-reward ratio now? Okay, imagine if you can win 70% of time. you're definitely going to make more. Imagine you have a risk-reward ratio higher than 1:2, you are going to make more. Okay, therefore the key, right, to trading is not just the winning percentage. Winning percentage is what most new trader is concerned on. In fact, a professional trader actually looks at the risk-reward ratio rather than the winning percentage. Because if a decent risk-reward ratio, you can easily make money at the end of the month, even with a strategy that loses 50% of time. Okay, so now I hope that you guys understand the power of risk-reward ratio, and every time when you trade, right, you have to take special notice about this risk-reward ratio. Even when you're learning a new strategy, you must make sure that it has a good risk-reward ratio, minimum 1:2, for you to be profitable. Okay, so the best forex strategy, right, that I'm going to introduce to you today in this video tutorial is actually the buy the dips and sell the rally strategy. Okay, so what do I mean by buy the dips and sell the rally? When we are having this is actually a trend trading strategy. Okay, basically, if you have been reading up forex book or taken up any forex courses, right, you should have understand that the trend is a very powerful friend. If you are able to ride the trend, you're actually going to make a lot of profits. Okay, and this is exactly what you are going to learn in this strategy. Later on, I'll explain to you what is buy the dips and sell the rally. But first of all, right, I will go through with you what are the indicators that you need for this strategy. Okay, so basically for this trend trading strategy, you need three indicators. You need the 200 EMA. Okay, you need the Fibonacci indicators. You need the stochastic indicators. Okay, these are three indicators that you need to actually trade this strategy. Okay, so let me go through the steps, right, of how you're going to trade this strategy. Okay, so the step one, right, that you have to do is actually to identify the trend of the market, and this is done using the 200 EMA. So let me explain to you how you're going to use 200 EMA to do the job. Okay, so this, what you're seeing here in this picture, right, is actually 200 EMA, the exponential moving average. Okay, when you see that it's actually sloping downwards, right, it's telling you that you're in a strong downtrend. If you ever see 200 EMA sloping upwards, it's telling you that you're in a strong uptrend. If you see that it's flat, okay, you will never trade this strategy because it's telling you that the price is in consolidation, moving sideways, and there's no trend at the moment. Okay, so first of all, you need to make use of this 200 EMA. You just plot it on the chart. So first of all, right, you just have to plot this 200 EMA. Okay, this 200 EMA, and then take a look at the trend. Once you identify the trend, you move to step 2. Okay, which is wait for the price to retrace and hit the Fibonacci level or any support level. Okay, so what I'm talking about here is this. What do I mean by buy the dip, sell the rally? So let's take for example here. You can see you're actually in a downtrend. Okay, however, the price will never move down all the way. It will retrace. Okay, so therefore the price will actually move up a little bit, and you sell the rally. You see that? You moved up a little bit, you sell the rally. So in a downtrend, right, we actually sell the rally. In an uptrend, if the price is in the uptrend, right, you usually move up, down, up, down, up, down. So we will buy the dips. You can see when you go up, it comes down, we buy the dips. We buy the dips. We buy the dips. So in this case, if it's downtrend, we will sell the rally, sell the rally. Okay, so but however, we don't just enter a trade in any state. We have to wait for the price to retrace and hit the Fibonacci level, which is very important. Okay, so the third thing that you have to do is to check whether the stochastic indicator is showing a sign of overbought or oversold. Okay, once all these factors are confirmed, you enter a trade and place a stop loss at 30 pips and target profits at 90 pips. And this strategy gives you a risk-reward ratio of 1:3. Okay, that can see that it lost 30 pips in the trade, but you make 90 pips. Okay, so let's go through an example, right, of how it works. But before that, let me go through the stochastic indicator first, because some of you may not know how to check whether it's overbought or oversold. Okay, so let's take a look at this stochastic indicator here. Okay, this is a stochastic indicator. It consists of two levels. You can see here, this level and this level. Okay, this is 20 level, this is 80 level. As long as the stochastic hits the 80 level, it's a sign that the price is now overbought, and it will usually move down. Okay, if it hits the below the 20 level, right, it's a sign it's oversold, and most of the time you'll eventually move up. Okay, so you can see here the price move down, it goes down, then later on it's oversold, right? Again, slowly the price actually moved up. You can see it's oversold. It will not come down immediately unless it hit by a support or resistance. Okay, but you move up, and later on move down, eventually move down. Okay, so you need the stochastic indicator together with Fibonacci indicator to make sure that this works. Okay, so let's go through an example here. Okay, can you take a look at this picture here? You can see that we're in an uptrend. You can see that the 200 EMA is sloping upwards. We're in an uptrend. So what I do, right, the price moved up, I'm going to buy the dips. So first of all, I draw the Fibonacci indicator, okay, and I identify the 3 important level, the 0.618 level, 0.500 level, 0.382 level. If you do not know how to draw the Fibonacci correctly, you can just visit my blog at forexindicator.org. Okay, under the Forex indicator section, I actually teach you how to use the Fibonacci indicator. Okay, but so for this strategy, right, you need this indicator. So what we do is that we wait for the price to move down and hit this important level. We do not enter a trade immediately. You have to check your stochastic indicator. You see, it's oversold. Once it's oversold, it's telling us that the price is going to move up soon. Okay, so what we do, once it hit here, okay, once the trade close the candle, open a new candle here, I'll enter a long trade. I'm going to buy the dips, and sure enough, you can see the price actually moved up, and moved up. And we make a profits from this trade. This strategy is very easy to execute. First of all, right, you just have to identify the trend. You see the trend here. Second, draw a Fibonacci level. Third, wait for the price to hit the level. Plus, you have the stochastic showing overbought or oversold. Then you enter the trade and make a profit out of it. Okay, so this Forex trend strategy is one of my favorite because it's very easy to use and give me very good risk reward ratio. Okay, but besides this, right, I have other strategy as well. I also use the trend line strategy. Where you can see, actually got 3 trend line here. Okay, the short term trend line, the medium term trend line, and the long term trend line. You can see every time, right, the price breaks the trend line, right, with a valid breakout, you actually move to the next one. Okay, you can see, you break this one, you move to the next one. And therefore, actually I make a lot of money from this strategy as well. Okay, once it breaks the short-term trend line, I enter a long trade, make profits. Breaks the medium-term trend line, I will enter a trade and take profit here. Okay, so this is another strategy that I like to use. And to find out more about this Forex trend line strategy, you can just visit my blog at forexindicator.org. Okay, so for more effective trading strategy, right, with high risk reward ratio, you can just visit my blog at forexindicator.org. This is where actually I share my trading strategy and trading indicators with you guys, so that you have a better understanding of how I trade. Okay, so basically, let's take a look at this is my blog. Okay, so once you enter my blog, you actually see the Forex strategy that I'm using, the Forex indicator that I'm using. You can actually just go through them. Okay, plus actually this Forex FAQ section. This is where I answer the question from my subscriber of my newsletter, which is free. You could just subscribe to my newsletter here, by the side here. It's like a free newsletter, and you can just ask me questions and I'll answer them here. Okay, currently there are about 6,099 subscribers to this newsletter. And basically this blog, right, took me a few years to write, and I hope that you guys find this useful for you. Okay, so if you want more trading strategy and tips, right, you could just visit my blog at forexindicator.org. And I hope that I'll talk to you soon.